Good afternoon and welcome to Market View. This is the Monday edition. Thank you for tuning in. We are on the 11th day of November 2024. Good afternoon and welcome. My name is Lungelele Makakula. Do watch us on our YouTube page, Eswatini TV. We are on DSTV as well, channel 286. Last week, Eswatini and South Africa signed a joint action plan for ease of trade at the Oshuk borders in the long term. This is an agreement signed by the Border Management Authority and the South African Revenue Service and Eswatini through the ENTFC. With a joint action plan, the ENTFC and its partners aim to cut the border processing times by at least 20% before December 2026. It is also worth noting that currently about 300 trucks pass through Ngwenya Oshuk each day, with processing times averaging 2 hours and 28 minutes for imports into Eswatini and 1 hour and 39 minutes for exports to South Africa. The bilateral joint action plan will include commitments to enhance the existing approach to managing the borders. Business journalist Nelsiwe Ndlangamandla had a discussion with the acting co-chair of the National Trade Facilitation Committee and head of Trade and Commerce at Business Eswatini, Musan Masego, to understand the details of the agreement. Stay tuned for this interview later on the program. On our last segment, Sanele Sbiya will connect with us for today's market analysis. For now, let's go to our first story. With the Eswatini Electricity Company requesting an average tariff increase of 25.51 and 27.06% for the year 2025-2026 and the year 2026-2027 respectively, Eswatini feel it is time that the SACU stabilization is used to cushion these increases. This happens at the backdrop of an approved 12% water hike, which will be staggered in the next 3 years. We asked the Minister for Finance, Honorable Neil Rakenberg, on the possibility of using the stabilization fund now that Eswatini feel the increases will dig deep into their pockets.
The water situation is Eswatini Water Services, which obviously supply water service to everybody and they charge for use. They've as everybody else, as government, as homesteads, they're also subject to inflation and the cost of inflation. So hence we know inflation has been slightly above 4%, but it's kind of stabilizing around 4% now. And so all they are saying is, can they also pay their people cost of living? Can they also, pay the increases coming to them as an institution are also linked to inflation? As long as people are coming with inflation-related increases, it means it's in line. We are not charging anyone more. The households should theoretically also be getting cost of living adjustments or inflation-related increases. In fact, one will notice that at the bottom end, at the lower end of the wage market, electricity, I have even in different platforms been warning Eswatini is to say that unfortunately we know that there are going to be very big increases coming from Eskom to EEC. There have been very big increases up until now. The last 4 years have been very high increases from Eskom. They've managed to cushion those because of profits that they had in the entity. Number one, though, they've now got to the end of those profits. There are no longer profits in EEC to cushion, and they're going to have to pass that through. And I think there are bigger increases coming from Eskom. And hence I've been saying, Eswatini, understand there might be a problem coming here. Please do what you can with electricity to reduce your consumption. We need to be very considerate of electricity and rather try and save there, because when it comes to cushioning the price, so if the price comes to number one, EEC asking the regulator for an increase does not mean it's yet for Eswatini. That will still come. The regulator will absolutely look at all the issues you're pointing at now, possibly even approach government to say, can one cushion, what can we do here to try and help Eswatini? But that will still come and we'll see. And there'll be discussions in the public domain and we'll really get to that point. EEC is purely saying, this is the increase coming to us. Can we get it from the prices? And so hence, when it comes to government will consider, obviously there isn't money lying around. The SACU Stabilization Fund is specifically for SACU. It is not coming to government's rescue at any point. It is specifically to cushion the volatility in SACU. It's got one purpose, it's cushioning the volatility of SACU. And next year we might need to cushion SACU because SACU might go down. So we need to keep it for that single purpose, and that'll be able to save itself there. The fact that government is doing a lot better means that if there is massive increases, one can consider what we can do as government. Here or there, government does put cushions in place, like with fuel, Government does have a shock absorber there too to handle any possible spikes in the fuel price. So from that point of view, government will analyze everything and come out with an outcome.
And that's it for our business news this afternoon. Let's go for an ad break. We'll resume shortly.
Hi, I'm Alex. Let's talk about banks, specifically central banks. Believe it or not, they're really important to our everyday lives. Central banks manage the flow of money in a country's economy, so things don't go haywire. They're typically part of the government, although they should operate independently. The specific roles of central banks vary from country to country, but they usually have a few key responsibilities. Mainly, they're in charge of monetary policy to keep prices stable. One way they do this is through what's called the interest rate, which is the cost of borrowing money. Central banks lower interest rates, making credit cheap to boost the economy. Because when credit to buy things, such as homes, food, and cars gets cheaper, people tend to buy more. And who doesn't love that? But when prices get too high, central banks can raise rates, making money more expensive to borrow. This can slow growth, but it also brings down prices. Central banks also buy and sell foreign currency. They can do this to weaken or support the value of their own currency. Stability isn't just about keeping prices steady. That's why central banks also play a key role in preserving financial stability. For example, if a commercial bank is in trouble, a central bank can give them a loan, but only as a last resort. Central banks have been using all of these tools to help keep things stable for hundreds of years. Okay, so why am I telling you this? Well, whether you're buying bread, or a pomegranate, or even starting a business, that stability is important for all of us. And here at the IMF, a big part of our job is providing policy advice that can help central banks all over the world meet their price and financial stability goals.
Welcome back. You're still watching Market View. This is the Monday edition. Last week, Eswatini and South Africa signed a joint action plan for ease of trade at the Osho-Ngwenya borders in the long term. Business journalist Nelson Ndlangamandla had a discussion with the acting co-chair of the National Trade Facilitation Committee on the day and head of trade and commerce at Business Eswatini, Musa Masego, to understand the details of the agreement.
We know that South Africa is Eswatini's largest trading partner, but today there is the signing of the joint action plan. How important is this plan for these two countries?
No, thank you. I think the starting point is just to underscore how important trade is, in particular to the Kingdom of Eswatini. We do have ambitions of being an export-oriented economy, and as such, the ease in which we move goods in and out of the country becomes paramount. So as the body that is tasked with looking after trade facilitation issues, that's the National Trade Facilitation Committee, which is a public-private platform where we both have the customs authorities, all the other border agencies, and business associations. It becomes important to foster a working relationship with the Republic of South Africa so that whatever efficiencies we develop as a country are also replicated on the South African side. That means then the ease in which we can move goods in and out of the country improves. And as we continue to hopefully grow the economy, that means goods can move across the border very quickly.
I know, Musa, you have touched a bit on what this plan entails, but I want you to give us a broader picture on what Eswatini in South Africa is planning to do in the long term.
All right, so there are a number of pillars which I think entrenched in the joint action plan. There's the issue of data exchange. The end goal here is to have a single customs declaration. But what we have at the moment is customs to customs data exchange program, which means the moment someone submits their customs declaration to either of the entities, take for example ERS, when you're exporting into South Africa, automatically that information is then shared with SARS so that the declaration process on the South African side becomes a quicker process. You don't have to sit down and redo your declaration. So now it's just working out a few issues to incorporate some of the other border agencies which aren't on the data exchange platform. That includes your Ministry of Agriculture, your Port Health, immigration, and all the others. So that's just one example on the data exchange facility. You do have certain instances, depending on the nature of the goods, which calls for inspections. Now, the idea, what we want to do there is to share the facilities so that you have joint inspections. Instead of having your truck stopped on the Eswatini side to be inspected and then you move on to the South African side to be inspected as well, we are working on standard operating procedures so that if there is a need for the cargo to be inspected, that is handled in one place. We are also working on a program that has started this year, which is called the Authorized Economic Operator, which is in essence identifying compliant traders and fast-tracking or expediting their movement across the border. Now, we as Eswatini have an AEO program, and the South Africans also have the same AEO program. And we have a number of accredited traders already. We have over 10 in Eswatini, and I believe it's 160 on the South African side. Now, we are working on what is called a mutual recognition agreement, which means if I am all accredited in Eswatini, that accreditation should translate to tangible benefits regarding expedited clearance on the South African side as well. So there are a few, I think, just a few points that we need to touch on and finalize before we can activate those mutual recognition agreements. And then it's just speaking to other issues around a blueprint. I think this is more long-term, a blueprint for expansion of the border facilities. Now, if Eswatini is intending to improve, I think it needs to be in line with the improvements that are being made on the South African side. So a lot of that is the infrastructure improvement, connectivity improvement, and all these other processes. So the working groups that have been born out of this joint action plan will then meet on a regular basis to ensure that all these different elements, like I mentioned, from the data exchange, inspection facilities, AEO, and all these other elements, are implemented as planned and if there's a need perhaps to redesign, there will always be a team that's constantly working on giving feedback.
I'm glad you touched on the issue of infrastructure as well as technology, because that was going to be my next question, but I'm going to phrase this question like this now. How ready are we as a country for these changes?
In terms of feedback we received from the World Bank, who is our biggest technical partner, who've provided technical assistance on this part, looking at the SADC region, Eswatini, or looking at the SADC region, the Ngwenya-Oshuk border is the one that is most better placed or best placed to be converted to a one-stop border. Now, the physical infrastructure aside, I think that becomes less of an issue. More often than not, the critical point when it comes to border operations are the process simplifications. And that is something, because we've been working on this for quite a number of years, the processes, I think I would estimate probably 80% there. It's just a matter of getting over the line. So in terms of the gradual changes, as I mentioned earlier, we are expecting people to see them. But I think in terms of tangible physical differences, obviously that will then depend on how quickly we can afford to raise the required budget for physical infrastructure changes. However, the little process changes, which I'll give an example of, just co-locating your immigration officer so that you don't need to go to one window for customs and one window for immigration. You come into the border, you get your immigration and your customs procedures all done in one window, and then you're out the door. So those little process changes, we have implemented them, and we are expecting that within the next 3 months, they will be finalized, and then we can move on to the second phase.
When can we expect this project or this joint action plan to be piloted at the Ngwenya border gate?
So the start date for the pilot is something that we'll have to work out. What perhaps people can expect to see will be, as I mentioned, the gradual changes. For example, we want to remove the paper gate pass that you receive on the Eswatini side and move that to an electronic number plate reader. So this is just one example. We are expecting to make those little gradual changes. When we actually begin the bigger pilot, I think that is something that we will then come back and announce that the plan is now ready. There are a few legal issues that we do need to sort out in terms of the legislation differences between the two countries. And once we do get that over the line, we'll then come back and report that we are ready to proceed with the big pilot.
Today, Musa, you are wearing the hat of being the acting co-chair of the National Trade Facilitation Committee. So I have to ask you of other initiatives that are in the pipeline, especially to boost trade between South Africa and Eswatini.
Because the Ngwenya-Oshuk border is the best place to be converted to a one-stop border, which would be the first in the Saku region. We want to use that blueprint to then improve all our other borders. So it is also within the joint action plan that once we have concluded all the process changes in the Ngwenya-Oshuk border, we then move to the Lavumisa-Kulela border, where we will start with the border operating hours by extending that to 24 hours, and then also reintroducing some of these changes that we will have implemented on the Ngwenya-Oshuk border. So again, our main aim as the Eswatini National Trade Facilitation Committee is, to reduce the time spent at the border to less than 30 minutes. So it is within our hope that perhaps post-2028, that might be something that we will be able to realize. But as we have committed to conducting a time release study every 2 years, we will be keeping track and obviously updating our traders on how far or how close we are to achieving those goals.
Very, very insightful details that you have shared, Musa, today about the joint action plan. I hope the next time we meet, we will be talking about the pilot. It's been a pleasure having you on the show.
That was Nelsie. We're having a discussion with Musa Masego on the Ngwenya-Oshuk border joint action plan. After the break, we connect with Sanela Sbia for today's market analysis. Stay with us.
Be sure to catch Business Watch every Wednesday between 2 p.m. to 3 p.m., where we feature the latest updates on business news, market trends, and exclusive interviews with industry leaders, as well as insights on emerging small and medium enterprises in the commercial sector. Business Watch, your business leader.
kunjalo masondo amahle kunathi lesa
sabadandi ukuthi njengalokhu
sivile sive sithi khulumeni.
Welcome back. You're so tuned into Market View. This is the Monday edition. Thank you for staying with us. We now connect with Sanele Sbia for today's market analysis. Mrs. Sbia, very good afternoon and welcome to Market View. What's happening in the markets today? Perhaps you can start with international markets. Looking at the U.S. markets, it's looking quite good. Looking at the S&P 500, it looks like things are quite going well. Take us through the international markets first.
Thank you, Lou, and good afternoon to the viewer. So what we're seeing in the markets today is what I would call basically a market endorsement of President Trump's victory. And we know that during the campaign trail, President-elect Trump actually did promise quite a huge stimulus package, a huge tax cut towards businesses. And I think that's what markets are trying to put themselves to position themselves for, that tax cut that is to come. There's also issues of less regulation under President Trump. If you remember, during his previous term, he really just wanted business to be allowed to operate and work as efficient as they could under the circumstances. So there's a bit of that regulatory framework which the government, the business community is looking into. But at this point, it's a bit too early to say what is going to happen, as we are still awaiting to see how President Trump and his team are going to unpack their agenda for next year when they eventually get sworn into office. But right now, that's what the markets are looking into, that bit of a hope that there is going to come that stimulus. We are going to have a president that's going to be pro-growth, that's going to drive growth in the market. So that's what the markets are looking into. And then over and above, you couple that with the Federal Reserve Bank meeting of last week, where we saw the 25 basis point cut in the baseline interest rate. So that as well signals what the business is actually looking forward to. The fact that the economy is doing relatively well, and the hard money environment has actually come and gone, and we're looking at that one in the rear view mirror. However, with that, the new elections and the new government coming into play, there are those fears of what those tax policies would mean for inflation, what the rest of Trump's policies would mean for inflation. But I do believe markets will start pricing that into next year's strategies, say around from February going forward. But right now, the markets are expected to continue rallying on the background of President Trump's re-election. And then we are aware that this week we are waiting to see a lot of economic data come out in terms of the inflation in the US, and the minutes from the Federal Reserve Bank meeting. So that's going to actually give the market a clearer indication of whether this bullish stance that the markets are taking as a result of the election can actually be sustained. So we are now waiting to see if the economy will sustain a case for Trump. And we've also seen that, translating into a relatively stronger dollar over the past few days. And then into the equities themselves, if you look at that, the Dow Jones Industrial Average has actually touched 44,000 just sometime last week Friday. And at the same time, we saw that happening with the S&P 500 just on that 6,000 mark. And also with NASDAQ also doing relatively well. So we do expect that this rally is going to be sustained, and we might actually see more records being broken. And then moving on to Europe, what we're seeing in Europe there is, in as much as we are moving relatively towards the green, but what the markets are signaling is some sort of restraint, some sort of caution as we look at what a Trump presidency will mean. And if you look into the FTSE 100, you will see that it's still at the at 8,100 mark. The equilibrium was around 82,000 in the previous weeks and 83,000, the 8,300 in the few weeks that we saw previously. Same thing with Germany, relative growth, but what you're seeing is there's that composure, that wait and see. Same thing with France. So what the markets are doing, more especially in Europe, is waiting to see what President Trump's policy stance will be on Europe this time around. We know he's already spoken of a 10% tariff on everything that comes into the US, and we know that the US is Europe's major trading partner. So the markets are going to be on the cautious mode around throughout Europe as we're waiting to see how that is going to look like. And then also we're waiting to see, growth data coming out from the Eurozone and see how that is going to actually help propel more growth if there is going to be that growth in those equities. And then if you move into Asia, you will see that we've seen some losses, more especially say around Hong Kong, thereabout. But if you look at the market overall, you can see that it is not moving at the direction or the rate at which we would have hoped it was going to move. It's purely because last week, the Chinese government, the Communist Party actually presented stimulus package to the tune of close to $1 trillion in stimulus packages. But however, markets are a bit skeptic of those because most of them seem to go towards recapitalizing struggling local governments instead of being direct demand stimulating activities in the markets, more especially going towards bolstering that ailing household sector or that real estate sector within the mainland. So that's what's been pulling the whole of Asia down, and coupling with the fact that Asia is also going into this type of what a new Trump era means for the entire region. We know the other time that China bore quite a huge brand of those tariffs talks and those issues around the trade wars and all of those other issues depends. So right now the markets are waiting to see how China, if that growth is not retained, what it means when we now get a President Trump who might actually be anti-China. So we might see that those prospects are also coming into play, and markets pricing those in terms of what the demand would mean coming in from China if they're failing, as it were, while we still have that lame duck president type of situation. And then moving into South Africa, again, you will see that the South African Stock Exchange lost a bit of ground, moving into last week Friday, while still just mulling the issue of what a Trump presidency will mean for South Africa. And then now what we're seeing is the fact that the Chinese stimuli has actually failed to impress. Markets have not moved that much. So what we're looking forward to right now is to see the inflation data coming out of the US, and and just see what that would mean and how what we should expect in terms of the interest rate trajectory, what it means for the overall health of the economy. And then once we started seeing those, and then we might as well just start seeing some movements within the Johannesburg Stock Exchange, just trying to regain those 87,000 mark. But, Trump's election has actually seen shares rally, and it's actually seen the dollar rally. So as well, we're seeing issues like gold losing a bit, and we know South African stock exchange is laden with the heavy precious metals. So the strengthening dollar has actually taken a bit off of those minerals. And then now, if you move on into the Eswatini Stock Exchange, you will realize that we haven't had any change today. The relative market remains relatively it's calm, for want of a better word. And then when you come into the commodities, because of the strengthening dollar and those treasury yields in the US really being posting very high levels we've not seen in a very long time, we're seeing gold losing a bit of its shine. And Brent crude has also lost in terms of the barrel the output, the price, then the global markets, because of that weakening China stance and that strong dollar. And then the risk of another cyclone in the US was averted. So that's why we're seeing coming into play there. And then when we move into the currencies, we can see that the domestic currency actually gave back some of its gains against the dollar, and it also gave back the gains against the euro, and also did give back the gains against the Japanese yen, while we are still waiting to see what is happening. So the true story here is it's the dollar and the other currencies that are strengthening without any changes in the domestic economy. That's why we're seeing these downward declines. Thank you.
All right, thank you, Mr. Spear, for that analysis for today's financial markets. We've come to the end of our program. It is 2:30. Thank you for tuning in. This was the Monday edition. If you've just tuned in, worry not. You can still watch this episode on our YouTube page, Eswatini TV. We'll see you tomorrow at exactly 2 p.m. Enjoy the rest of your day. We'll see you tomorrow.